So if I am looking to find the 5-minute chart that is moving in that direction that I'm hoping that I can find a trend in, what I find myself doing, again, focusing on this chart right here, what I'm finding myself doing is just, cycling through, looking for that uptrend or downtrend. Again, a day to about a day and a half on the look back view of the 5-minute chart. We've got the wave here, we've got the pivots, daily pivots here, and I'm just cycling through to see which one of these time frames is giving me a markup or markdown cycle. Just like that. And if I don't have one, I don't do anything. Okay? If I don't have one, I'm simply not doing anything. So it's really a matter of making sure that I'm very strict about not being too flexible about finding that markup or markdown. Because what happens is, again, we talked about 5-minute charts, 12 of them every hour. I want to cherry pick. I want to find a perfect example of a markup or markdown cycle. And if I don't have one, I'm going to wait, because guess what? Next day I'm going to have another 12 candles. The next day I'm going to have another 12 candles. I find that when I typically am active with this setup, it is during the overlap between Frankfurt, London, and New York. I am typically most active. That means I'll be looking for these setups basically between about 7 a.m. to about 11 a.m. or 8 to about noon. So for that 4-hour chunk of time. I do not like trading with these short-term time frames of 5-minute during economic reports. I like to be out before the report, and if I want to get in, I'll do so after that volatility settles down, about 3 to 5 minutes later. Okay? So what are the things that I'm focusing in on when I'm trying to identify that 12 to 2 o'clock markup or that 4 to 6 o'clock markdown? So I know my look back, 1 to 1.5 days, 2 days. Okay? I know my angle, 12 to 2 or 4 to 6. Okay? There are certain criteria that I'll find lend more clarity and more power to a markup or markdown cycle on any time frame. The 5 minutes, no exception. When I find a markup or markdown cycle, and I sure as heck wish I had one here. I have some examples that I could show you. Let's go ahead and use those since I'm not finding any markup or markdowns right now. And I'm looking at live charts because I sure as heck would have loved to set up a trade right here during our session, and I just don't see a really great example. And I don't want to kind of encourage you to kind of go, well, this is close enough during our educational talk. So I'm looking to see if we have anything, and it's just not panning out here. So let me go ahead and show you some charts that I had captured earlier this week. These are charts that I captured from earlier this week, so just bear with me. So you should see a chart right smack in the middle of the do you see that Canadian dollar chart? It should be smack in the middle of my setup here. This is actually just a snapshot of a chart that I took earlier. So hopefully you do. Okay. So what this is a single chart of the Canadian dollar, okay, that I had taken. And what I was hoping to share with you was basically this. Look at the angle here. Look at the angle of these 3 moving averages. They're heading up, right? These 3 moving averages are heading sharply up. A couple of the criteria that I'm looking for is, one, smoothness. I want it to be kind of smooth. I don't want a lot of bumps and wiggles within the movement of the wave. You can see there's a little bit of a wiggle or bump right here. Okay? So I want to see as smooth as possible. Another thing I want to see is actually a little bit of an established trend. You can see this has been moving up for some time here on this 5-minute chart. So it is established. Okay? Another criteria is respect for the wave. If the market has pulled back to this wave before, when it was angled up or down? Did it respect the support or resistance it was providing? And if I were to prioritize these, I'd probably say the smoothness of the wave is 1. Again, that lack of bumps and wiggles. I'd say respect for the support and resistance of the wave is number 2. And I'd say it being established would be number 3 in terms of importance. Okay? So you can see here a little bit of a wiggle or a bump. It's very established, and other than the bump, it's quite smooth, yes? Okay. Let's take a look at another example. And let me go ahead and capture this view here for you. All right. So you should now see a Euro-US dollar chart. And by the way, let me mention, these were all occurring roughly within a few moments of one another. These were all charts that were setting up with this angle during the morning session. Actually, you can see the date there, the 22nd, during the morning session during the U.S. And these were just some snapshots I took. Okay? So look at the angle. It's moving downward. You see that? Moving downward. So I have a 4 to 6 o'clock. It's smooth. Number 1, yes. Is there a test of the wave itself? No. So the respect for the support and resistance, we really don't have any kind of way to say yes or no. So that's just, neutral. Okay. What about established? Well, it's been moving lower, and there's definitely that markdown cycle. So while it has not been doing it for very long, there's definitely a sentiment of weakness being communicated here. Okay? So again, the first thing we're establishing is the market cycle worthy of even going to the next step? If you screw up at this point, I'm going to be frank, if you screw up at this point, if you're very lax about whether the markup or markdown cycle is good enough, if you ignore these criteria I'm talking about, the smoothness, whether it's established, the respect for the support and resistance, if you screw up here, everything else you're building is going to be on a shaky foundation. Okay? This is where most traders start to cut corners in the interest of just executing a trade. Don't do that. Okay? So take the time to spend time on this blue chart, on this wave chart, to make sure the markup cycles even merits going to the next step of possibly looking at an entry. All right, let me show you another example, and this will be the last one as far as examples of the wave on the blue chart are concerned. Okay, now you should see an Aussie. Okay. Now this is triage, by the way. What we're kind of doing is triage. Okay. We're not counting candles here in terms of how long it was bumpy or wiggling. We're not counting candles as far as established. It is a visual reading, and I will tell you much of experience is just simply starting to understand what's established in terms of not candle counting, but just a sentiment. I would love to be able to tell you there's a certain number of candles, but there's really not. You look at the direction, how long it's been doing it, and how sharply it moved up or down, that type of thing. Look at the Aussie here. Has it been moving down for very long? It's been moving down for about 8 hours, right? Since about 1 a.m., 2 a.m. maybe, 7, 8 hours. Is there a lot of wiggle or bumps? Yeah. I mean, look at, if you remember the smoothness of the wave on those other two charts, on the Canada and on the Euro-US dollar, there's a smoothness to the wave. Okay? They're all established. I mean, in fact, the Euro-US dollar is probably the least established. Okay? What about the respect for the resistance of the wave? This is where the wheels fall off the wagon here. Notice that when we do pull back, we pull back very deeply into the wave, and we're even breaking the top of it, which means we're breaking resistance. This is probably the worst example. Even though it is in a 4 to 6 o'clock market cycle, it's met the criteria, kind of the face value criteria, but are we getting the meaning of what we want out of this cycle? It's down, yes, but simply just don't go up, it's down, let's go set it up. Notice how it's not respecting the resistance of the wave and how much wiggle or bumpiness there is in this. This is what we want to avoid.